This conference will now be recorded.
Hey, so good morning, everyone. Thank you for tuning in to this morning's webinar with BMSS on the round 2 of the Paycheck Protection Program. Big thanks to BMSS for joining us this morning and taking the time to talk to our member businesses about this. It's a great opportunity for folks to apply for this. If you missed out on the first round, we'll also uncover some information on the first round as well. But thank you to, I see Todd Hines on here with us and Bailey Gunter will be presenting, Karen Stark's on here, and I saw, let's see, who else? I thought I saw Scott Heisman as well. I don't see him on the list now. I don't know where I missed him at, but thank you though to BMSS for doing this morning. We really appreciate you guys. But that's enough about from my end. So Todd, you want to take it away? I'll let you roll with it.
Thank you, Will. Everyone on the call, we appreciate your time. We so enjoy the work and appreciate the work that our local chamber does. Will and Heather and the whole team just do a fantastic job, and it's a privilege of ours to partner with them from time to time to present, to help our friends and neighbors as we address new changes in tax law. And my goodness, what a year it's been. We've was last spring, it seems like about 100 years ago now, but last spring we presented to the chamber and its members about the FFCRA when it first came out, in the CARES Act. The CARES Act was just a baby law at the time, had just come out. We had no idea the level of impact that the pandemic would have, and that it would even still be felt today in early 2021. So what a year it has been, indeed. One thing about 2020, and certainly anything that the government's involved with, 2020 was the year of new government acronyms. We had the FFCRA, which is the Families First Coronavirus Response Act. We had the CARES Act, which is the Coronavirus Aid, Relief, and Economic Security Act. We had the EIDL, or the EIDL, the Economic Injury Disaster Loan. Many of you have applied for that and received that. There was a grant associated with that too in the EIDL. And then, of course, PPP, the Paycheck Protection Program. It's a significant part of the CARES Act, and has been updated by the CAA, the Consolidated Appropriations Act, which became effective on December 27th. And we're going to focus our time and attention today specifically in that. There were some significant changes made to the PPP, Paycheck Protection Program, in the CAA, and then of course it created the second draw of the PPP, and it's commonly referred to as PPP2. And so we're going to go over some of those changes to the first PPP, and then focus our attention on the PPP2, the second draw. And I think that's what's hot on everybody's mind today. And then lastly, I want to mention we'll mention just briefly the ERC, the Employee Retention Credit, and spend some time there, just really wetting your whistle on that, so that you can go back to your advisors and talk about that, the significant changes in the CAA in regard to that, and how that impacts the forgiveness applications and things like that. So our presenter today is Ms. Bailey Gunter. She has been a leader in our firm and with our clients in everything CARES Act and PPP. She's a rising young professional in our firm, and just an incredible practitioner, loves to work with clients and with people, and has really spearheaded the entire task force for the entire firm across all of our offices. And we're fortunate to have her in Gadsden. She was born and raised here, and makes her home here in Gadsden, Etowah County. And so I'm going to mute myself and turn the program over to Bailey Gunter to get us started.
Good morning, everyone. My name is Bailey Gunter, and I'm a staff accountant here at BMSS. And like Todd said, I've been leading our PPP effort across all of our offices, but mostly in the Gadsden office since last March. I want to thank all of you for joining us this morning as we review the newest legislation regarding the PPP and the second loan opportunity. I just want to take a second to review all the topics that we will be covering this morning. First, we will discuss the tax deductibility of the PPP loans that were created back in the spring of 2020. This information will not only apply to the first round of PPP loans, but will also be in effect for the loans received during the second round. We will then transition into the changes that have been made to the PPP program as a whole, and we'll list out the additional expenses that will be covered during the second wave of the PPP loans. After that, we will jump into the second PPP draw, the requirements that must be met in order to qualify for the second draw, and then the loan amount and terms. So when the CARES Act was initially introduced back in the spring, it stated that any PPP loan amounts that were forgiven would ultimately be excluded from gross income on your books. The problem was that this act did not speak to the deductibility of the expenses paid for by the PPP funds, so this left most businesses in a bind and tax professionals on edge when planning for the 2020 tax year. The IRS then released Notice 2020-32 later in the spring that spoke to the deductibility of these expenses, which just led to more confusion since it contradicted Congress's original intentions. The new stimulus bill is properly known as the Consolidated Appropriations Act of 2021. Section 276 of this new legislation stated that no deduction shall be denied, no tax attribute shall be reduced, and no basis shall increase shall be denied by reason of the exclusion from gross income. So basically, this reversed the IRS's previous notion and recognized that all expenses that were paid using PPP loan funds are deductible regardless of the status of forgiveness. The total forgiven amount of your PPP loan will be categorized as tax-exempt income on your tax return and still increases basis for S corporation shareholders and partners in a partnership. We've addressed the tax deductibility of the PPP loan, but now I want to take a second to go over the book treatment for financial statement purposes. And by book, I mean your GAAP financial statements. There are going to be 4 different routes that will ultimately lead to 2 outcomes on your financial statements. Your PPP loan will either be kept as a liability on your balance sheet, or it will be moved to the other income section on your profit and loss statement. Using GAAP, the loan can be moved to the other income section before loan forgiveness is actually received from the SBA. So if you do believe that 100% forgiveness is going to be achieved, you can move that amount out of debt to the other income section on your income statement, but it will yield a different outcome for tax purposes. It is important to remember that the treatment of the loan on your GAAP financial statements does not determine tax treatment of the loan. It will just cause a book to tax difference on your 2020 tax return. And if you need help with the book treatment of your PPP loan, we will be happy to help you here at BMSS to consider all of these choices and walk through the outcomes of each of them. Just to show you an example of these book to tax differences and how they would come into play, let's say that there's a borrower who is an S corporation that has a single 100% shareholder. This business received a $1 million PPP loan and followed all of the rules and regulations put forth by the SBA regarding qualified expenses and have received full forgiveness by the SBA as of December 31st, 2020. Let's say that they had a $600,000 taxable loss in 2020, which includes the expenses that were paid for by the PPP loan, and the shareholder had a tax basis of 0 as of the beginning of January of 2020. Since this particular business has received full forgiveness from the SBA and moved their PPP loan from the debt section to the other income section on their profit and loss statement, that will result in a total tax-exempt income of $1 million. Even though this other income is considered tax-exempt, it will still increase shareholder basis by that much, allowing the corporation to deduct their full $600,000 loss in 2020. So this will leave the shareholder with an ending basis amount of $400,000.
Let me interject one thing there.
Yeah, go ahead.
I think this is a significant planning opportunity for a lot of our clients, and We would encourage all of you to consult your tax advisors here, especially if you're in an S corporation or a partnership environment where you have suspended losses, those losses that you have incurred in prior years that you have not been able to take. We see it significantly in S corporations, but also partnerships. So this is an opportunity to grow basis without taxable income and open up or unlock those prior year suspended losses. So this is a thing that many people aren't thinking about, that came up as a result of the CAA and the PPP and all of the forgiveness regulations that are out there. So be mindful of this basis trap of prior year losses and how this opens up the door for some deductibility. So we would encourage you all to consult your tax advisors to check on this if you're in that category. And you probably know, based on your conversations with your CPAs in the past, if this applies to you. If you don't, certainly ask and consult if you're in that S corp or partnership environment where those losses might be trapped.
Okay, so let's use the same example that I just used on the previous slide, but this time the borrower has not received full forgiveness by the SBA. The loan forgiveness application may have been submitted, and it might have even been submitted to by their lender to the SBA, but actual 100% forgiveness has not been granted by the SBA. Therefore, it cannot be considered tax-exempt income on their tax return. I mentioned a few slides ago that for GAAP financial statement purposes, if full forgiveness is expected, the total loan can be moved from the liability section on your balance sheet to the other income section on your tax return. However, for tax purposes, the total loan amount will still be considered debt since full forgiveness has not officially been granted at that time. Since it's still categorized as a loan on their 2020 tax return, it will have no effect on their shareholder basis, and the $600,000 loss for that year will have to be put off to the next year to potentially be deducted, since there is no basis there this year to deduct it from. Two weeks ago, the Alabama Department of Revenue stated that Alabama will fall in suit with the federal tax treatment of the PPP loan and will permit deductibility of those expenses that were paid for using PPP funds. On the individual level, Alabama will not include any stimulus payments received in their 2020 taxable income. Although Alabama state funds received through coronavirus relief funds like Revive Alabama and Revive Plus grants will be excluded from taxable income, you will not be able to deduct expenses that were either paid for or you were reimbursed for by these relief funds. Now I want to dive into the changes made to the additional PPP program. To ensure that stimulus money is used appropriately, Congress must approve the usage of this money. With the power in the hands of Congress, they allocated $35 billion to those eligible recipients who have not received a PPP loan so far. So businesses can apply for the first draw of the PPP loan through March 31st of 2021. And the original qualifications for the PPP loan will still apply for the first draw. Eligible businesses include small businesses that have fewer than 500 employees per physical location. During the forgiveness process of the first round of the PPP loan, we had a lot of questions about the acceptable length of the covered period. For the first round of the PPP loan, the SBA will only accept either an 8-week or a 24-week covered period. We had a lot of clients that did not reach full forgiveness by the end of the 8 weeks, but had enough eligible expenses to get them there before the 24-week period was complete. So we basically used their eligible expenses through the date in which full forgiveness was attained, but listed the full 24-week covered period on their application. And for those of you who are not familiar with the requirements that must be met in order to reach full forgiveness, you must have maintained employee and compensation levels. You must have spent all of your PPP loan proceeds on payroll costs and other eligible non-payroll expenses, and you must have used at least 60% of your loan proceeds on payroll costs. So payroll costs will always be acceptable when applying for loan forgiveness. So we have been encouraging our clients here at BMSS to use 100% of their PPP loan on payroll costs to ensure that full forgiveness can easily be achieved. Non-payroll costs can certainly be used, and we have used them on clients' forgiveness applications before, but there can be some gray areas on whether or not certain non-payroll costs are considered acceptable to the SBA. So using payroll costs alone also requires less documentation when applying for forgiveness. But because of the new employee retention credit, there might be some different opinions on isolating to just payroll costs, but we will address this new employee retention credit at the end of the presentation. With all that being said, borrowers in the second round can now choose either the ending date. They can choose an ending date of their covered period anytime between 8 weeks after the loan origination date, ending 24 weeks after the loan was received. So you could choose any time between 8 weeks or 24 weeks. On December 21st, 2020, when Congress enacted the new bill, it also added new direction for the simplified application process for borrowers with first draw PPP loans less than $150,000. It states that loans less than or equal to $150,000 will be forgiven as long as the borrower signs and submits the certifications explaining that they use their best efforts to comply with the rules and regulations set forth by the SBA regarding the usage of their first PPP loan. And along with this certification, the borrower will also have to include a description of the number of employees that the recipient was able to retain because of their PPP loan, the estimated amount of the loan spent on payroll costs, and the total PPP loan value. The borrower will not have to submit any documentation in addition to these certifications and the information that I just listed out. The Act also repeals the previous requirement that stated that PPP borrowers must deduct any amount of the EIDL advance that they received from their total PPP forgiveness amount. So basically now your total PPP forgiveness amount will not be reduced by the EIDL advance amount that you received. Congress stated that this change will date back to the enactment of the CARES Act. So if you have already applied for forgiveness or received full forgiveness from the SBA that was reduced by the amount of your EIDL advance, the SBA is required to make that right. This simplified form for loans equal to or less than 150,000 was released on January the 19th of this year, and I have attached the link to this PowerPoint slide, which will be available to you after the webinar. On top of the changes that the original PPP loan program were made, the SBA also created additional covered expenses. The costs that were covered during the first round of the PPP loan are the same in the second round, but they've added 4 specific additional non-payroll expenses. These additional expenses not only apply for the second round, but if a borrower has not yet applied for or received forgiveness on their first loan, but need additional expenditures in order to reach full forgiveness, these 4 new options can be used. These non-payroll costs include operations expenditures, such as business software or cloud computing services that facilitates business operations. The pandemic really forced businesses to invest in particular products that would allow an easy transition to working from home. So the purpose of this new covered expense is to relieve some of the expenditures used on these types of programs. Further guidance is expected to be released by the SBA about the details of this covered expense, but the broad definition listed in the PowerPoint is the description given in the actual bill. The next new covered expense is property damage costs, including vandalism and looting that were not covered by insurance or other payments. Covered supplier costs are our next additional covered expense. This includes any payments that were made to a supplier of goods that are essential to the operations of the entity at the time in which the payment is made, or any payments that were made under the terms of contracts, orders, or purchase orders that were in effect before the covered period of the PPP loan began. And if the expenditure was related to perishable goods, it must have been in effect before or during the covered period. And lastly, the SBA added worker protection costs to the list of their covered expenses. Included in this slide is the actual definition of the covered worker protection expenses, but I just wanted to give you an overview. These are going to be expenditures that occurred in order to follow federal, state, or local requirements issued since March 1st and ending when the national state of emergency declaration for the COVID-19 pandemic concludes. These expenses are those related to maintenance of standards for sanitation, social distancing, or worker customer safety measures related to the coronavirus. Section 312 of the new stimulus bill permits increases in loan amounts due to all of these updated regulations. Existing PPP borrowers that have not received loan forgiveness as of December 27th, 2020 have two options. They can either reapply for a first draw PPP loan if they have previously returned some or all of their first draw loan funds, or they can request to modify their first draw PPP loan amount if they previously did not accept the full amount for which they are eligible. We do expect the SBA to release further guidance on this information. Moving on from the changes in the first round, let's go ahead and get into the second wave of the PPP loans. On January 11th of 2021, the SBA reopened the Paycheck Protection Program for the first draw PPP loans, and then 2 days later, they began accepting applications for the second draw of PPP loans. This second wave enables certain eligible borrowers that previously received a PPP loan to apply for a second draw with the same general terms as their first loan. There are 3 eligibility requirements that you must meet in order to qualify for a second PPP loan. First, the borrower must have less than 300 employees per physical location. This qualification was 500 employees in the first round, but it has been reduced to 300 employees on a per location basis for the second round. The next requirement states that if borrowers received a first draw loan, that loan must be used in full or will have been fully used by the expected date of the second loan disbursement. The last eligibility condition is that the employer must have had at least a 25% decline in gross receipts in a qualifying quarter of 2020 compared to that same relative quarter in 2019. Applicants can choose comparative data for any quarter in 2020 as long as it is compared to the same quarter in 2019 and shows the 25% reduction. For businesses that were not in operation during the first and second quarters of 2019, they must demonstrate that gross receipts in any quarter of 2020 were at least 25% lower than during either the third or fourth quarters of 2019. For borrowers that were not in business in the first, second, or third quarters of 2019, they must compare any quarter in 2020 to the fourth quarter of 2019 to show that 25% reduction. And then entities that were not in business at all in 2019, but were in operation before February 15th of 2020, they must demonstrate that either the second, third, or fourth quarter gross receipts of 2020 are down by 25% or more when compared to the first quarter of 2020. So those businesses that began operations after February 15th of 2020 will not qualify. The borrower must satisfy all 3 of these eligibility conditions in order to qualify for a second PPP loan. If you expect to receive a second loan in amount over $150,000, you must provide documentation showing that 25% reduction in gross receipts with your second draw loan application. And the amounts provided on the documentation must support the numbers that are used on the application. If you expect to receive a second PPP loan less than $150, then you will not have to provide any documentation at the time of the loan application. However, you will have to provide this documentation before or at the time of loan forgiveness when you request your loan forgiveness of the second PPP loan or upon the SBA request. This leads to the question of what is acceptable documentation to show my 25% gross receipt reduction. So quarterly financial statements are an acceptable form of documentation. If your financial statements are not audited, then you must sign and date the first page of your financial statements and initial all other pages, just attesting to their accuracy. If it's not clear which figures on the financial statements are used for the 25% reduction test, then you will be required to make note on which numbers are used in this calculation on your paper. The other acceptable form of documentation is quarterly bank statements for the entity showing deposits from the 2 quarters being compared. Again, if it's not clear which amounts are used in the calculation, then you must annotate which numbers are used on the bank statement.
Hey, Betty, let me add one thing there.
Okay.
What we're finding from some of our lenders is that even if you're below 150, they're requesting that you provide, some, not all, are requesting that you provide documentation for the 25% reduction. And so just be mindful of that. Check with your lender if they have a special requirement of that before you apply. Some are requiring the paper form with the documentation. Some of our lenders have a portal that you can log on to and enter your information there very quickly and easily. So the application process is not difficult, and many of our clients are just duplicating the 2019 information with the payroll calculation 2.5 times, unless you're in the special category that Betty will go over in a second. And so it's an easy process, but just be mindful that your lender may require some extra things for them in preparation for their forgiveness calculations down the line. So it's worth a phone call or an email to your local lender just to check on that.
So one question that arises when discussing the 25% reduction test is the definition of gross receipts. The SBA gave further guidance on what is included in gross receipts for both for-profit and not-for-profit businesses. For a for-profit business, gross receipts will include all revenue in whatever form received or accrued in accordance with the entity's accounting method from whatever source. These sources consist of sales of products or services, interest, dividends, rents, royalties, fees, or commissions, and then will be reduced by the total amount of returns and allowances. And for nonprofit entities, gross receipts include the gross amount received by the organization during its annual accounting period from all sources without reduction for any expenses like cost of goods sold, cost of operations, or expenses used in collecting or raising money. So gross receipts will include contributions, gifts, grants, dues received, gain on sale of assets, and investment income for not-for-profit businesses. On the other hand, gross receipts do not include any net capital gains or losses for for-profit businesses, sales taxes or other taxes collected from customers, proceeds from transactions between a company and its domestic or foreign partners, or any amounts collected from a third party such as travel agents, real estate agents, and so on. Also, any forgiven amount of your first PPP loan or any amount of an EIDL advance received is not going to be included in the calculation of gross receipts. And although gross receipts are defined, the SBA did not specify which accounting method to use to account for those gross receipts, but we do suggest and say that consistency in your accounting method is going to be the most important factor when determining accounting method for the treatment of those gross receipts. So if you used cash basis in 2019, you'll also want to use cash basis for your comparison of your 2020 numbers. The calculation of your loan amount for PPP2 is basically the same as the calculation that you used during the first round of the PPP loan. The first round of the PPP loan used 2019 average monthly payroll costs for the calendar year to calculate the maximum amount. For the second draw, applicants now have the option to use 2020 average monthly payroll costs to calculate their maximum loan amount, but we have found that in most cases, businesses have wanted to use their 2019 numbers. This average monthly payroll cost is then multiplied by 2.5 to get the total maximum loan amount. If you are using 2019 numbers in this calculation, then your loan amount will be the same as it was in the first round. I think it's Most important to note, the change between PPP1 and PPP2 loan amounts is going to be the cap made at the $2 million mark. The initial PPP program set the cap at $10 million, so just be aware that the cap is far less this time around. Also make note that seasonal employers now have the option to take 2.5 times their average monthly payroll costs during any 12-week period between February 15th of 2019 and February 15th of 2020. On the second draw PPP loan application, there's a space for you to fill out your NAICS code. And the purpose for this space is for the SBA to identify which applicants fall into code 72. So code 72 is for the accommodation and food services, which is considered the hardest hit business category during the pandemic, according to the SBA. So if the applicant falls into this category, they will then multiply their average monthly payroll cost by 3.5 instead of the standard 2.5, allowing them to achieve a higher maximum loan amount. However, loans are still capped at $2 million, so keep that in mind. You will want to be sure to check and see what business categories fall under code 72 to see if you are eligible to use the 3.5 in your calculation. A list is provided on this slide, which will be available to you after the presentation. The new legislation also set forth a specified loan amount for farmers and ranchers according to the gross income reported on their Schedule F. Farms with no employees will qualify to receive a PPP2 loan equal to the amount of 2019 gross income reported on their Schedule F. This amount will be capped at $20,833, which is $100,000 divided by 12 months times the 2.5. Farmers that do have employees will have the opportunity to receive that $20,833 cap plus the amount of their average monthly payroll costs in 2019 times the 2.5. It's important to note that the second wave of PPP loans will have the same loan terms as the first round. It'll have a 1% interest rate. It will be 100% guaranteed by the SBA, so no personal guarantees or collateral will be required. And then it has a 5-year maturity. The application for the second round of the PPP funds was released on January 8th, and it's very similar to the application used for the initial PPP loan. We found this application to be very simple, especially since most applicants that received a first PPP loan will be using the same numbers to calculate their maximum loan amount as they did on their first loan application. If a borrower's first draw PPP loan is under review by the SBA or could possibly be considered ineligible for the first round, their lender will receive a notification from the SBA once a PPP2 loan application is submitted for that business, and the borrower will not receive an SBA loan number until everything is resolved. As we wrap up, I wanted to give everyone a visual of the PPP2 loan application. If your lender uses a portal system for the PPP program, your application might look slightly different, but it will ultimately be requesting the same information. Similar to the first application, the borrower will enter all of their general business information, this time including their NAICS code. And then it asks for the calculation of the maximum loan amount using the average monthly payroll costs for 2019 or 2020 times the 2.5. And just like the first application, you will need to put the amount of employees that you have at the time of loan application. You'll then need to clarify your intentions on the use of your PPP2 loan and then provide the quarterly figures for the 25% reduction requirement. A list of owners will also need to be given, as you see in the middle of page 1 on the far left. The rest of the application is just certifications that you'll need to read and sign off on, and then your application will be complete. It's important to remember that if you expect to receive a second loan above $150,000, the supporting documentation for the 25% reduction requirement will need to be attached to your application. But if you expect to receive a loan less than $150,000, then you will not have to provide that documentation at that time. But like Todd said earlier, it is worth a call to your lender to see if they would like to go ahead and receive that information with your with your loan application. The deadline for the PPP2 loan applications is March 31st of 2021. And now I'm going to hand it over to Todd, and he's going to go over a few points on the employee retention credit.
Okay, thank you, Bailey. Listen, in our webinar we conducted last week for our clients and friends firm-wide, we spent 45-50 minutes on the employee retention credit. And so all I want to do this morning is just mention it to you so that you can go back and consult with your financial advisor, your tax advisor, your CPA firm, and plan for the forgiveness calculation if you haven't already received that. So what is an ERC, an employee retention credit, and do you even qualify? Bailey mentioned in her comments earlier that we were encouraging clients who were trying to obtain forgiveness for the PPP that they could easily just use payroll, because if we planned for 2.5 months, they changed the rules and gave us 6 months, 24 weeks. And so we could easily get to the full forgiveness with just payroll, which made it very simple. The lenders wanted that because it was much less documentation, and nothing at all wrong with that. Well, on December the 27th, under the CAA, the employee retention credit was brought back into play. Earlier, under the old law, if you received a PPP loan, you did not qualify. You were automatically exempted from the ERC, the employee retention credit. Well, the new law, the CAA, brought it back into play and allows us to pursue that credit. But the issue is, and this is where you need to talk to your advisors, the issue is you can't use the same payroll to obtain forgiveness for PPP and also obtain the employee retention credit. So there is some calculation, some play with the calculation that might be advantageous, so that you can get full, if you qualify, you can get the full employee retention credit in addition to full forgiveness. And Bailey talked about all those additional expenses that the new act brought into play for PPP, especially the employee protection expenses. I can think of just thousands of businesses and industries and the amount of money that they spent to protect their employees, and all that cost is now in play. So there are other eligible costs that can be used to obtain full forgiveness and retain some payroll if needed to get the retention credit. And why is that important? Why do you even care? So let's talk about what happens if you do, to make you qualify for the employee retention credit. First, you need to have an eligible quarter, and what would make an eligible quarter is a 50% drop in revenue when compared to the previous quarter in the prior year. So comparing 2020 to 2019, if you had a 50% drop in revenue, gross receipts, not revenue, if you had a 50% drop in gross receipts, and Bailey defined that earlier for us in the presentation, then that is an eligible quarter, and so the ERC is in play for you. And if you don't have the 50% drop, but you had a full or partial shutdown by the government, by a government order, that also brings you into play. So I'm thinking of our dental office clients, our dentists. The government shut them down for 6 weeks in early spring, and so that brings them into play for ERC. So, and once you have an eligible quarter, that quarter remains, the future quarters remain eligible until the next quarter exceeds 80% of the receipts of the same quarter in 2019. So what does that all mean? There is a maximum credit of 50% of the wages paid to someone in an eligible quarter of up to $10,000 in wages. So the maximum credit would be $5,000. So let's just say, for example, you had 10 employees and they were paid during that quarter $4,000. So that's $40,000. And that was an eligible quarter, and all of those employees were eligible on $40,000 wages for that quarter. That's a $20,000 potential credit. And if you can utilize other things other than the payroll for that period that would also qualify you for this ERC, that's a $20,000, you might call free money credit. It's a credit that's available. I want you to be mindful of it and be prepared for it, and talk to your advisors about it, because many folks have just ignored the ERC, but it is out there and it's eligible and available if it's something that's needed. Now, if you've already obtained forgiveness, don't worry about this. It's it's done. The hay's in the barn, my dad used to say. And so, don't be bothered by that. Be thankful for the forgiveness and move forward. But if you haven't, this is something that you might want to consider talking to your advisors about and seeing if you qualify for it. There are steps to follow, much more than what I've just shared with you today. But the kicker is, do you qualify? Do you have an eligible quarter? Did you have a 50% drop in gross receipts? Or did you have a full or partial shutdown by a government order? And so if you're a dental office, you did. You had the partial shutdown by the government order. And all the other businesses that are on the call, or any of our clients, we're looking at quarterly amounts. We look for the 25% reduction for the second PPP draw, and we're looking for the 50% reduction for the ERC. So be mindful of that as you're talking to your advisors and getting things done this busy season. It's available and it's out there, and it's something that many folks aren't aware of. So just encourage you to talk to your folks about that. But we do appreciate so much the opportunity to share this information with you. And if you have any questions, certainly feel free to drop Will a line, and he knows how to reach us, or our contact information is there on the screen. We would certainly be willing to answer any questions if you have those now. But if you're like me, when I close out of a meeting, I think of 1,000 things I wish I would have asked. And so feel free to contact us. If you have advisors, contact your advisors and make sure you are fully aware of the opportunities that have come about because of the CAA that was effective December the 27th. So Will, I'll turn it back to you. We appreciate you guys very much, and thank you for your time.
Absolutely. Thank you so much, Todd and Bailey and everyone with BMSS for taking the time today. We actually have one question. Dina Thurman with the Cultural Arts Center messaged me, and she says, Form 2483-SD asks for number of employees. Does this mean currently or at the time of the first PPP?
Is this her application for loan forgiveness or for the PPP2 loan application?
I think she's asking about the first one. She said the first PPP.
Okay, the first PPP is going to be the amount of employees that you have at the time of the application. And then if you are doing your forgiveness application, you will take that number from your loan application, your initial loan application, and bring it to the forgiveness application. But there will also be a separate number that asks for number of employees at the time of loan forgiveness application. So usually that employee number is going to retain to the time of the application.
So Dana, if you have any more questions, you see their contact info there, just shoot them an email, or email me, I'll be happy to get you in touch with them. Do you have any more questions or comments before we close out? All right, I guess not. So again, thank you to BMSS for taking the time today to speak on this topic. I know we had a lot of folks on the call, so thank you all for attending as well. So I'll go ahead and turn off the recording.